All right, so now that we took a look at the accounting cycle and the rules of GAAP, we're now going to be introducing you to another method which helps us record our transactions is using the cash basis versus the accrual basis. Okay? Cash basis is when you only record revenues or transactions like that when cash is received, right? And you only record expenses when cash is readily available to be spent, right? So again, a lot of mom and pop shops, usually when they start off their business, they usually are cash basis just because, again, they can't wait for, customers to want to owe them money. But first things too is that when you are running on a cash basis, it's a little harder to sustain your business because you need the cash in order for you to continue operations. So in this case, right, revenues are only recorded when cash is received, so then they have the sufficient funds to go ahead and make those purchases to buy the stuff to go ahead and create more products in order to sell more goods. Now again, as an accounting, a lot of times the accrual basis is something that is much more easily done, okay? In this case, when we are using the accrual basis, transactions are recorded when earned. So especially revenues, right? Regardless of whether you received cash or not. So once again, if a product has been sold, you record it immediately, whether you received cash or not. Right? And that same thing goes with expenses, right? Expenses are recorded when incurred, meaning when the minute it has happened, the service has been completed, right? You're going to record the expense as soon as you receive a bill or when it's done, it's completed, and so on and so forth, regardless whether you paid or not. So oftentimes, again, we live more in an accrual type of society now, right? Where we're allowed to record revenues, right? Easy by saying, hey, I'm going to buy something from you and I'm not going to pay you now. I'm going to pay you later. That is going to be an accrual type of basis. Same thing with expenses, right? Oftentimes, a lot of companies will complete the service for you and they end up billing you. They don't accept the payment until later, right? They bill you, all right? And they expect you to pay it within 30 days, right? So again, or they accept a credit card, whatever payment that they do. But in this case, that's the huge difference. One of them is you need to have cash at all times. So you only record it. And even if someone owes you the money, you're not going to record it until they pay you. So that's the idea for cash basis is you only record when cash is there and you only record your expenses when cash is spent. Okay? Where the accrual basis, once again, when you earn it, something's sold, the service is provided, you record it right then and there. Okay? So let's take a look at an example here where a contracting company, right, we're going to compare the cash basis versus the accrual basis side by side so you can make a clear vision, okay? So for this example here, you are a construction worker, and your task is to build an office building for $50,000, okay? The construction is to start as of January 1st and is scheduled to be completed by April 30th, okay? And if the company pays you $50,000 as of January 1st, how would you record this transaction? Okay? So in this case, as a cash basis, right? You're going to record it as of January because you received cash. Even though you haven't earned the service yet, in this case, that's fine. We still recognize it because you still received cash. Okay? You received cash for $50,000. But then when April rolls around, right, you're not going to have an entry here because you already received the cash. It's already been done. Okay? Whereas so this is cash basis, right? We receive the cash, so we record the cash at the minute we receive it, right? And then in April, we don't need to record anything because we already received the cash. Let's take a look for the accrual type of basis where, if that was true, on January, what we're going to do is we are going to record that we received the cash. However, we haven't earned the service yet. So we have an unearned service, which is going to be known as a liability because in this case, we owe services because they gave us a prepayment. Okay? And then in April, we then undo that unearned revenue and we actually recognize that we earned the revenue as of April 30th because we completed the job as of April 30th. So that's the huge difference here is one side, we received the cash, we recorded it right then and there, even though we haven't completed the task yet. Okay? Whereas on the accrual type, we'll record the cash, but we haven't earned the revenue yet. So again, this account right here, unearned service, is a liability. We haven't recorded the income yet. Until we complete the service, then we earned it. Then we can go ahead and record that we earned that $50,000. Okay? Huge difference. Okay? Well, let's take a look at the same scenario, except the difference here is instead of getting paid as of January, we get paid at the end of April. So on April 30th, we end up getting paid the $50,000. How are we going to record it now? What's the difference? Okay, so in this case, January for cash basis, right? Obviously, January, we won't record anything because we never received the cash. However, in April 30th, we will recognize the service has been completed as well as we received the cash. Okay? Difference. Now, comparing to the accrual side, same thing goes as well. You're not going to need to record anything because, first off, you haven't completed the service and you haven't received any cash. So in this case, no entry is required for January. However, in April, it's going to be the same as cash basis because you received the cash and the service was completed. Okay? So, any questions in between, in the difference between the cash and accrual basis?
No.
Okay. All right. So again, it's the difference of when we record versus how we record. Okay. So let's go ahead and go to chapter review. So we talked about the accounting cycle and how it is imperative that you know the exact order. Okay. But again, I'm not going to have you memorize what each single one does because we will go through every single step of the accounting cycle throughout the next 15 weeks of class, okay? We'll go through every single one, okay? However, for the exam, you need to know the order because, again, it's a cycle. You have to go in a full circle. It has to be in a specific order, okay? We talked about the accounting period and how in order for you to determine what the accounting period is to complete the accounting cycle, which could be daily, weekly, monthly, and quarterly, or even yearly. Okay? We talked about the difference between calendar versus fiscal year for tax purposes, and we talked about the importance of why we need to create these financial statements. Okay? And then we talked about GAAP, which is the generally accepted accounting principles, right? We have three categories with four, subsections in them. So again, the assumptions, the basic principles, and your constraints. Now in this case, this is just an overview, just what they are. It doesn't really give you a direction of what they what the meaning or what they actually do, okay? So that's your responsibility to learn that because I could ask you questions that asks you to apply your knowledge, okay? So in this case, for the exam, for any other things that I'm going to be testing you on, I'm only going to be testing you on the assumptions and the basic principles. Just because the constraints, right? We talked about that. This is more for more managerial type of ordeals. However, I do want you guys to know they do exist. Okay? So now in this case, there's no other mnemonic device except for if we're learning your gap, right? You're learning your ABCs, right? Your assumptions, your basic principles, and your constraints. So whatever way that you want to be able to memorize what your assumptions are and what your basic principles are, it's up to you on that end, okay? But when we learn gap, we learn our ABCs. Okay? And then last but not least, we talked about the cash versus the accrual basis. Only difference here is for cash basis is straightforward. You need cash to be able to run everything. Where accrual basis, you are going to record when you earn things, regardless whether you receive cash or not. Same thing with expenses. The minute it happens and it has happened, which is incurred, right, you're going to record it right then and there. Okay? So that is that. All right. And so let's go ahead and go over the chapter 4 exercise, and then we'll be done for the day. All right. So number 1, what is the accounting cycle? What is the accounting cycle?
It is a methodical system, set of rules to ensure the accuracy and conformity of financial statements.
Good, right? It's a methodical set of procedures to ensure the accuracy of accounting. Good. All right. Next is, what are the 4 characteristics of financial statements?
Reliable, relevant, consistent, and comparable.
Good. Reliable, relevant, consistent, and comparable. Good. What about number 3? What are the 10 steps of the accounting cycle? So now again, what are they in exact order? So number 1, what's step 1?
Collect source data.
Good. Next.
Analyze and sort data.
All right, number 3.
Record transaction in general journal.
Good. What's after that?
General ledger.
Yeah, general ledger. You're going to post it to the general ledger. All right, what happens after that?
You prepare unadjusted trial balance.
Trial balance. Okay, what else?
Enter adjusted entries.
Adjustments. Okay, what else?
Prepare adjusted trial balance.
Okay. Number 8.
Create financial statements.
All right, number 9.
Close the books.
And last step.
Post-closing trial balance.
Good. All right. Number 4. Okay, what is the difference between the calendar year and fiscal year?
The calendar year is from the first of the first month, January 1st, to the end of December.
Okay, and
The, what is it,
fiscal year?
fiscal year is when you start at any month of the first of the month,
Mm-hmm.
and it's a consecutive 12 months.
Good. I mean, consecutive 12 months starting first of first month and ends last day of the 12th month. Good. Number 3. All right. What are examples of an accounting period?
Is it day? One of them day
Yeah, you can do it every day. Good.
or month,
You could do it at the end of the month. Good.
quarter,
You could do it at the end of the quarter.
year?
And then good. Quarterly. And then this one annually. Good. Number 6. What does GAP stand for?
Generally accepted accounting principles.
Hmm? Number 7. Okay. What are the 4 accounting assumptions?
Business or economic entity,
Okay. This doesn't have, there's no particular order.
going concern,
What else?
accounting period, monetary,
Good. Okay. What are the 4 basic principles?
anybody else want to answer?
Now you could go ahead.
Historical, is it a historical cost?
Historical cost. Historical cost. And what else?
Realization, revenue recognition,
Okay, I like to refer it as revenue recognition. It's easier, but they're interchangeable.
okay. Matching,
Matching principle, yes. And last but not least,
adequate disclosure,
adequate disclosure. Good. And then what are the 4 conventions constraints?
So I don't found mine like the chapter 6. I have from 1 to 4. I don't have 6.
What do you need chapter 6 for?
Oh, I thought we needed for statement.
Okay. Can we get back to chapter 4 for now? Okay, number 9. What are the 4 constraints and conventions?
Materiality, convention,
Materiality, right? Is something worth it enough to record? What are the other ones?
cost benefit,
Right? Creating alternatives.
conservatism,
Conservatism, right? Conservatism, right? Which allows you to say, hey, out of the alternatives, which one is going to least likely overstate my assets? Okay, and last but not least,
industry,
industry practices. Good, excellent. Okay. Number 10, okay? Under cash basis of accounting, revenues are recorded when blank and expenses are paid when blank is available to spend. Okay, revenues are recognized when blank cash, okay, is received. Okay, expenses are paid when cash, right? It's all about cash. Okay, but what about the accrual basis? Okay, under the accrual basis of accounting, revenues are recognized when blank and expenses are recognized when blank. Accrual, this is accrual basis, but when do you recognize revenues?
earned,
When you earn them. Okay, and then expenses are recognized when incurred, right? The minute it happens, that's when you record it. Okay? So this is where I'm going to ask you to apply your knowledge in regards to the accounting principles here. So number 12 under GAAP, okay? Which rule states that you must separate transactions from personal and business?
business or economic,
Correct, right? Business or economic. Right? Number 13, under GAAP, which rule states that assets must be recorded at original price or fair market value?
Is it historical?
That is correct. It is the historical cost. Right? Number 14, under GAAP, which rule states that when recording a transaction, right, it must be in terms of value or dollar amount. Okay, it cannot be recorded as quantity or per item.
is it cost benefit,
No, it's not cost benefit because again, cost benefit is going to be in terms of alternative, right? What are the two options? Which one's going to give me a less cost and what benefit comes from it? So in this case, no. In this case, it's asking you when you record, you can't record as quantity. You have to record at total value or dollar amount. Monetary, good. Okay, so in this case, what I'm going to tell you here is I'm only looking for the general principle. I don't need you to be specific. I don't need to tell you I don't need you to tell me that this is monetary measurement. Okay, I just need you to know the overall assumption here, which is just the monetary assumption. Okay, good. Question number 15 under GRAP, okay, which rule states that when you have extra information that is pertaining a transaction, example, okay, number of employees, wages, salaries, cost of inventory, etc., etc., okay, you must record it you must record it in the notes of the financial statements.
Is it adequate disclosure?
Excellent. Adequate disclosure. Good. Right? The notes to the financial statements is going to give you the huge indicator. Notes of the adequate disclosure. Okay. Last but not least, question number 16 under GAAP. Okay, which rule states that all revenues must be equal to all expenses.
Matching?
It is matching. Good. All right. So again, for today, that was chapter 4. Any other questions? So as again, I could be asking you questions to apply your knowledge for the general accepted accounting principles, okay? So not just knowing to be able to list them, you need to know the definition and what it does and how can it be applied, because I can ask you definition questions or I can ask you questions to apply your knowledge, okay? But as far as that, I need you to just only know the first 8, so just the accounting assumptions and basic principles. You just need to know what they are and that they exist, the conventions, but I need you to know the ins and depths of the principles and the assumptions, okay? Other than that, all right, do you guys have any questions in regards to chapter 4?